Good evening, all. Ira Epstein, and this is Leak Day, Break-In Day, Hack Day. What do I mean by all that? I'll be with you in a second on that. It is Tuesday, and we are at the 9th of January, 2024, and the time just getting on to 6:05 p.m. Central Time. Well, as bad as the winter storm is through the Midwest, it's hard to believe Chicago, sitting on the lake where I live, we have slush at best, rain. No snow. I have been up since 2:30 in the morning. They prepared us for 3 to 6 inches of snow. I get up at 4 anyways. I said, you know something? I'll get out there. I'll do the shoveling. I have a snow plow. I live in downtown Chicago, but you get fined if you don't do your sidewalk. And you got to do your sidewalk area on big days like this. I've never had a fine, but I do go take care of it. And normally I've got great neighbors. I don't mind walking a good part of the city block and doing everybody's. It's great exercise, and I feel good. Now I feel terrible because I got up and unfortunately, you don't even need a shovel. There's nothing. So we wait. But the cold weather is coming. I'm not trying to talk weather here other than it's going to impact heating oil, natural gas. We're going to be going to zero over the weekend and really cold weather. And what we get, typically moves east. So weather is going to move across the country. And we have gone from one of the mildest Decembers on record in the Midwest, to one of the now nasty ones. And areas of Chicago have 6 to 8 inches of snow. Next week, they're talking we can add to that. We'll have over a foot on the ground. So we're making up for it very quick. I got my fingers crossed. I don't want the city to get it, but I'll bet we end up with 3 to 6 inches along the line. We haven't had it in so long. I can't wait to get the exercise. Now, what did I just say? Hack and all that. I don't know if you know what went on today with Bitcoin. Some hackers got into the Twitter account of the SEC. Number one, I didn't know they had a Twitter account. I guess they have all these social accounts. Why is beyond me. They have an official website. What's wrong with that? So they got in there and they put out that the SEC, in a nice-looking statement, has approved ETFs. That gets the traders going because this stuff spreads like wildfire. So the market gets bid up very quickly to 48,000, and then the SEC hears about this. They're wondering what's going on. Somebody must have run into a room. Did we approve this? No, we didn't approve anything. Look at the website. They take it down, and you fall back to 46,000. All 1, 2, 3. But that's a telltale sign. You only went up to 48,000. Don't get me wrong. It was a jump. Not the dramatic jump so many traders are prepping you for. Every day, CNBC, Bloomberg, they got all these Bitcoin people. Where are we going? Of course, the sky. We're going to $500,000. This is it. Well, you had today the leak. It wasn't true. Only went up to 48,000. Pay attention. That's probably telling you something of a story. I don't know where these things go ultimately, but off the news of an approval, I think you got a first free look. When we look at the foreign currency markets, they don't know what to do. And the reason they don't know what to do is because Thursday you get CPI, Friday you get PPI. Tonight in my report, I'm covering what so many of the banks are saying as to what their bank analysts think when the rate cuts are coming. And I can tell you, the big banks don't think March is where the number is. I realize the traders do, but I think the traders are wrong. It would take, and I've been trying to figure it out, how do you drop CPI dramatically here in PPI when the U.S. consumer is spending like no tomorrow? We just saw the November credit card debt that they took on, both revolving and regular. Instead of $9 billion that the market thought, it was $23 billion. If they're taking on all that debt, they're buying things. If they're buying things, last I went to college, and I did take a lot of economic courses, you generally don't get CPI falling when that's happening. That's the demand factor. And if you're buying the goods and taking them off, then the PPI starts stabilizing with that too. I mean, it all goes down the chain. Could this be wrong? Could I be very wrong? Well, heck, I'm Mr. Swiss Cheese. I'm wrong a lot. But I have discovered in my 55 years of being a registered broker that logic plays an important role in markets. And you could take all these Harvard grads that write all these papers and all, terrific. When they get 55 years in it, they won't remember what college they went to, and they'll say logic plays a role. You watch. I think you'll see that over time. So the other thing that happened is the Houthis again attacked ships tonight in the Red Sea. They're testing the coalition. They're not going to do anything as Israel, and I'm talking the coalition, won't be doing anything as Israel's in peace talks in Cairo to see if they can free up some more hostages and do a trade and maybe hold off the battle for a bit. The word is a bit. Nothing's going to get Israel that I know of at this point to stop until they feel, that's Israel feels, they've got a mission complete enough to stop. All the pressure in the world's not going to stop the country. All right, so that's where this thing's going. So let's take a look maybe and get a feel for where we're at, knowing that you got PPI, CPI coming out. For the week, we're up 1.25%. Not bad. That includes tonight's trade. You can see how the market has suddenly become a sideways market. You don't need me to tell you that, but boy, if you don't recognize that, there's something wrong with you. That's what you have. You don't have a trending market. You have a market that's got a higher peak than that peak, a lower low than this break low. That is not a trend. The market is stuck. It's playing against what I told you is called, by me, the line in the sand. And so often that's the case. Markets like to go against main moving averages and from there figure out what to do. I believe the 18-day average is that average. Then I look to see what the Bollinger Bands are doing. And the reason is this algorithm is designed that on the first time it's hit to be a number that a lot of professionals say, bingo, that's where I have to liquidate some positions no matter what happens. Why? Because 95% of the time the market stays within the band. So if you're going to hit it 95% of the time it's staying there and you're a trader and you don't take something off the table, shame on you. What are you waiting for? That one event in life that just keeps going and going? They do come. Will you be in the right market at the right time for it? All right. Then I look at momentum. You had been oversold. You're pretty flat right now. I don't see a darn thing here. Why? CPI, PPI. The smart money's getting ready to play their cards. What about NASDAQ? Do you think this looks any different? I don't make this stuff up. I don't draw the lines. Tell me that doesn't look the same way. Tell me this doesn't look the same way to you in the Dow. You can see what they're all doing. They're narrowing in Bollinger Bands. They're stuck at the 18-day average of closes, and they're doing this with their thumbs. The pros are going, let's see what this looks like. All right. 4% of the traders think there's a chance of a January move. 4%, that's like nothing. 59% earlier today, I didn't look just before I did this, thought that a March number. I'm at a March number probability of maybe 25%. So I don't think that's happening. But I could be at a much higher number if CPI and PPI fell. I just gave you reasons. I don't see that being the case. The market that's the weakest is the Russell. It's the market that everybody gets wrong. See, all the pros, quote unquote pros, will tell you, you want to get into those low caps. They haven't moved yet. They're the ones to go. If you followed that wonderful advice all of last year, you didn't make anywhere near what the other indices did. In bull markets, you buy the strongest. In bear markets, you sell the weakest. And the guys that are playing the back end to catch up, it just never seems to happen. When I look at the 10-year note, okay, so we've got a market here that's trying to figure out, is it a bull market or a bear market? I would give the bears an idea. I think this blue line should have been really a red arrow pointing here. I think you can make lower highs, lower lows, but would I tell you to sell into the Bollinger Band that's right below you? I don't think so. The market is at a downtrend. It definitely is, but that's about all that I'd be looking at going into the CPI number. You get a better picture. I did it right here. Lower highs, lower lows. And again, the support, looks to be the same type of chart. In the dollar index, you're void of trend, but what's going to happen when you reopen tonight, you're not open yet. It says January 9th. You'll open in just a little bit here. This Bollinger Band's going to fall. It's the way the math will work. And it'll carry it probably to this 102.60 level or under, which is going to make strong resistance at the 200-day average in gray in that Bollinger Band, void of a trend. I think you're just marking time for the moment. In the eurocurrency, you fell back down to the 100-day average of closes. Oh, I'm sorry, the 200-day, that's in gray. So that's the 200 and the 18. It doesn't matter which one of the major averages you're looking. I put a lot more credence on the 200 than the 100 normally because it represents almost 1 year worth of trading on a chart. But that's your near-term support. The resistance is the Bollinger Band. You're oversold as can be. You had a huge outside day down. 2 days have gone by. Do you know what the importance of that is? 2 days is super important because I'm going to leave it like that. When you take the outside day course, you learn why. I'll talk about that when I'm through with this. Here you are looking at this average. Okay. Just playing there in the pound. I'm still in the friendly camp in the pound. I think the market can make it up to the upper band, but instead of the market wanting to burst out one way or the other, it's suddenly just going sideways. The longer it goes sideways in here, ultimately, the bigger the move one way or the other, because it's like a spring inside of a pipe. It's winding itself up, building energy to burst out of here. Which way is it going to burst? I don't know. There's many reasons for me to think the Bank of England also wants to lower rates and so on to get the economy going, but I don't know. Nobody really knows. I give the bulls the nod at this point. Again, don't get me wrong, I laugh. You get over Bollinger Bands, what are the odds of staying over them? 5% of the time. So these guys are buying this market at 48,000 plus. This is the move. And before they know what's going on, they're out $2,000 a contract. It was down a lot more than that as they just went into a panic as the market was falling because the news they thought they had didn't exist. Not their fault. Somebody hacked Twitter. I wouldn't think that Twitter'd be the spot that the SEC makes its major announcement on. I would think it's their website, but what do I know? So I look at the market, I go, it's overbought, it's against that number. Let those people do what they know how to do. In the Brent versus WTI, all it's telling me is that the leader of the parade is still Brent with stronger pricing, and the market is stuck, like so many of the other markets right now, at the 18-day average, void of a trend, trying to figure out what do I do next in this chart. WTI, pretty much the same. How many times is it hitting that 18-day average? We have the trend up, the bias down as you're under the 18-day average. And like I just showed you in one of the currencies for the dollar index, here's where you get now the Bollinger Band and the 200-day coming together. Very strong resistance point all the way right over there. In the heating oil market, the market is stopping because it finally got back here to the 200-day average. But the cold weather makes you want to be long, not short, number one. And number two, the chart picture's got the bias to the upside. I'm not saying it's a great-looking chart. That's it, though. And please be careful in nat gas. You have how many days do you have where you close over the band? Count them. You rarely go beyond 5. I'll let it go at that. And as I told you, when you look at outside days, how many days before you either take out the high or the low after the day is made is ultra important. I teach that in the different videos that I did with this. I love to teach because I give you ideas, I think, that you could use, be it a spider, an ETF, a stock market. It doesn't matter. A chart's a chart. I prefer when I teach, and you'll see that in my courses now, I don't even put the name on it. It's real charts. By the way, there's 9 video chapters in here. I use real charts, but I take off the names. And on the side, I often take off the values. And the reason is, I don't want you thinking what it is. I want you to think the pattern. Patterns everything. If it does this, you react. If it does that, you react. How do you follow with it? Well, first, it's one thing to teach in a course. It's another thing to show in real world time. So when I do my courses, you decide when I start my research with it. And then on the research, we're looking for them to happen. Outside days happen almost every day on a chart within my Spider ETF video or my futures. So we'll catch some, I bring them out, I point them to you what they are. So you're always getting reinforcement. The charting software you get is the same one I have. So you'll be able to work with that as well. We then take a look and we try to give you enough out here so that you can work with it in different ways and learn. The key is learning so you can apply it. IraEpstein.com. Go take a look at the course. It's under the word education. Again, this is it. You can move your cursor to the top and give it a click there. I'm Ira. You have a great day.